Before we start the video, I want you to subscribe to the best Telegram channel at the first link in the description, where we show our earnings on cryptocurrencies, and not only. Our capital that we manage is more than $3 million. Thanks for subscribing. Also in the description is a links to verified exchangers, when you register on which you get a welcome bonus from me. Let's get to the video. Friends, the stock and cryptocurrency markets are now in anticipation of an important event: the announcement of the new Fed USA discount rate. This will take place in just 2 days. Until then, we may see sharp reactions from Elon Musk and equally sharp statements from Robert Kiyosaki. What they are warning about, everyone should know. If you watch our newscasts, you know that the king of Twitter, Elon Musk, has begun to express his displeasure regarding the current policies of the USA Federal Reserve System. After all, he's very worried about what it might lead to. Back in late November, he wrote that the Fed should cut the rate immediately, since raising it would increase the chances of a serious recession. And this past Friday, he decided to remind himself of that threat with a new tweet. By the way, he was asked under the same tweet how long he thinks the recession can last. Elon Musk suggested that the situation may improve in the second quarter of 2024. In fact, it's not just the king of Twitter that is critical of the Fed, but also the head of ARK Invest, Cathie Wood, whose opinion Elon Musk agreed with. She said that such actions by the Federal Reserve System USA could lead to the same Great Global Depression that happened in 1929. At that time, after the end of World War I, inflation went up a lot, which caused the Fed to go hard. Then they first raised the interest rate sharply, and then they lowered it just as sharply. In the end, it had dire economic consequences. The president of the brokerage company Euro-Pacific Capital, Peter Schiff, known for his predictions of the crisis in 2008, unsuccessful forecasts for gold, and a sharp dislike for Bitcoin and other cryptocurrencies, expressed his opinion on this. He says that the risk is not that the Fed will cause a recession through its actions, but that the current recession will worsen and force the Fed to change its course too soon. Recall that Fed Chairman Jerome Powell, in a recent speech, said he was going to slow the pace of interest rate hikes, but he wasn't going to stop raising it altogether anytime soon. What if the Fed cheats? Ahead of December's key financial event, Bitcoin and the S&P 500 have begun to lay into the possibility of a tougher Fed decision. According to investing.com, the rate is projected to be raised by 50 basis points. That is, up to 4.5%. If it turns out that the rate hike will be more aggressive, we can expect a collapse in cryptocurrency rates. And if the rate is raised by only 25 basis points, we will most likely see a positive market reaction. How it will turn out in reality, we'll see. But there are more interesting forecasts about the situations on the financial market, which we'll speak about further. Robert Kiyosaki wrote in his Twitter account the other day that the owners of gold, silver, and bitcoins will get richer when the Federal Reserve System, Treasury, and Wall Street will print trillions of dollars. Also, he stressed that fake money depositors will be the biggest losers. The bottom line is that Kiyosaki considers USA dollars to be counterfeit money, which he believes became so in 1971. Then President Richard Nixon removed it from the gold standard, and the dollar was no longer backed by gold. As they say, he now holds on to faith and trust. In general, Kiyosaki is famous for his loud statements, and he has repeatedly tried to bury the most common currency in the world, that is, the dollar. He said he didn't trust Wall Street, the Treasury Department, the Fed, and even President Joe Biden. And in February of this year, Robert Kiyosaki warned that the Federal Reserve and the Treasury Department were destroying the USA dollar by advising people to buy Bitcoin. Frankly, that's not good advice, buying cryptocurrency at the beginning of a bear market. But nevertheless, I like his crazy attitude. Earlier this month, he explained that he is a Bitcoin investor, not a trader, and he gets excited when Bitcoin reaches a new bottom. So Kiyosaki believes that cryptocurrency cannot be blamed for the collapse of the FTX crypto exchange, stressing that Bitcoins are not the problem. He compared former FTX CEO Sam Bankman-Fried to Bernard Madoff, but in the cryptocurrency world. For those who don't know, Bernard Madoff is an American fraudster and financier who orchestrated the largest pyramid scheme in history to the tune of about $650 million. It is worth noting that though Robert Kiyosaki and the same Elon Musk are famous personalities in the world of finance, they cannot be called experts in monetary policy or cryptocurrency market. Therefore, their opinion should be treated with skepticism and compared to the opinion of more knowledgeable people, as well as professional analytics. In fact, we regularly share quality analytics and expert opinions in our Telegram channel. Everyone who wants to understand the world of finance a little more than Elon Musk should subscribe to it. Moreover, it will be possible to boast of his conclusions in conversations with friends, as well as to use his knowledge in practice. The link is in the description. And now let's move on to the expert opinion of Arthur Hayes, an American banker, former CEO of the BitMEX exchange and current arrestee serving time for mismanagement, in quotes, of the exchange, in the format of house arrest. He believes that the worst for the cryptocurrency market is over, because big and not so responsible companies have run out of Bitcoins to sell. As he said yesterday on the Scott Melker podcast, looking ahead, almost everyone who could have gone bankrupt has already gone bankrupt. Hayes explains his position by explaining that when centralized lending companies have financial problems, they often borrow first and then sell Bitcoin because it acts as a reserve asset, the most untouchable and the most liquid. He also reported that he cannot demonstrably prove that all the Bitcoin held by various insolvent institutions was sold off during the market turmoil, but it looks like they struggled to sell off the most liquid cryptocurrency collateral right before they went bankrupt. Arthur Hayes declares that the large-scale liquidations have come to an end. After all, there is no reason why large companies wouldn't sell off their cryptocurrency holdings in case of an urgent need for fiat funds to pay off their liabilities. He also believes that at some point in 2023, the US Treasury bond market will cease to function and for a tightening of Fed monetary policy, adding that Bitcoin and all other risky assets will rise. In other words, his rhetoric is somewhat similar to Robert Kiyosaki's. Well, let's watch for more Fed USA policy moves. Moreover, the day before the announcement of the new rate, i.e., tomorrow, we will see the report on inflation, which can already tell us what decision the Fed will take. Let's hope that the crypto market will finally shift and show a positive trend. For example, by showing a rise to $25,000. And if the Fed surprises with a soft decision, but in the event of a negative outcome, we could be down to the $14,000 mark. Subscribe to the channel and like this issue if you like it. Thanks for watching. Your Cryptanic.